Story number 5, Brian Bandell, we're going to go to you. This is a piece you wrote appeared in the South Florida Business Journal. I'll read you the headline. I'll read you the first couple graphs, then I want you to comment. Here we go with the headline. Headline: Insurance costs way down development. Subhead: Builders say surge could lead to a slowdown. First couple graphs, Brian. A dramatic increase in property insurance rates this year has helped spur a slowdown in real estate sales and development in South Florida, and it's a situation that's not expected to improve anytime soon. According to industry experts, commercial property insurance rates have spiked from 25 to 100% over the past year, depending on the property type and location. Deductibles also are higher in most cases. Combined with rising interest rates, that has greatly increased the carrying cost of buying commercial real estate for developers. A triple whammy of expensive builder risk insurance, high interest rates, and elevated construction prices can make some projects simply too costly to pursue. Matthew Rieger, president and CEO of the Miami-based Housing Trust Group, one of the state's largest affordable housing developers, said the cost to insure an apartment in his portfolio has jumped from $351 a unit in 2018 to $1,654 as a right now. And here's a quote from him. He says, "One thing I can assure you is rents have not increased in a similar way." He said, "I'm leasing units for 7 or 8 months a year, only to cover the insurance. Forget about the property taxes and payroll. It's completely out of balance. And that alone makes it difficult, if not impossible, to underwrite new transactions." Brian, we have a situation where everybody's bitching and moaning about affordability of housing, and the groups that are trying to build housing that the regular person can sort of achieve, they almost can't do it because the insurance prices are so much out of whack. What else can you tell us about the situation, and will it be improving anytime soon?
It doesn't seem like it's going to be improving anytime soon. Yes, Florida legislature did pass insurance reforms. Most of those reforms had to do with residential insurance, and even in the residential market, that's not going to bring rates down. If anything, they hope it just won't increase as much as it increased in the past. But for commercial insurance, it's a huge problem because they also have to insure these buildings. And unlike in the residential market where you can lean on citizens' property insurance and when you have a state backstop like the catastrophe fund, you don't have that in the private market. In the private market, it's all for-profit, it's reinsurance companies. They're all looking to make money, and the rates are very high. So it's tough for market rate apartments, but they can at least pass it on to the renters. But if you're affordable, we can't really pass it on to the renters because your rent is limited to what's affordable for someone making like 80% or area median income. So their rent is capped, but their insurance costs can go up unlimited. So that when they're looking at this, it's killing them. A lot of them, they projected a much lower cost of insurance. They're finishing the project, they're leasing it up. But when they get the numbers back on the insurance, they're like, "Wow, this is like almost no return on this investment. This is not good." And believe me, it's hurting market rate developers too. It's just that market rate, they can try and pass it on to the tenants, and in affordable, they really can't.
Interesting. And I should mention, I was just scrolling through near the bottom of the story. Brian, you make reference to 10 North Group, which is an entity that builds workforce or affordable type of housing. For disclosure, I sit on a board, member of the board of directors for one of their subsidiaries. So I just want to put that out there. I don't want anybody thinking one way or another. Brian, another thing that's come up there in reading the story, and there's so many interesting points. Talking about the impact to developers. Now, the actual people who are building this stuff, it says, despite strong fundamentals with solid occupancy rates and rent, few South Florida commercial properties are trading now because of high insurance costs, interest rates, and construction costs, said Mark Rubin, executive vice president of Boca Raton offices of Colliers International, when he focuses on South Florida office, retail, and industrial spaces. These factors have reduced the prices buyers are willing to pay, but most sellers don't want to sell for those prices unless they absolutely have to. Brian, how do you break that impasse where anybody coming in is like, this is going to cost me so much due to material costs and everything else, and then you have sellers saying, I know what the real market is, and I'm not going to let it go for anything less than that. What typically breaks an impasse like that, whether it's workforce / affordable housing, or it is residential, or it's car sales, or anything? What have you found over the course of your 20-plus year career? What has to change for us to see movement one way or another?
A lot of times they might still buy it if they feel there's enough upside, if they can look at say for an existing property, if they could say, well, if I put some money in and I renovate it, I can generate more income from it. Or if they say, well, I've seen a couple of properties trade, like the former Starwood office in Miami Beach. It was mostly vacant. So they're like, well, the upside is I lease it out and it'll be nicer and it'll make more income. So a lot of times it'll be a situation like that. But for a property that's fully stabilized sometimes and they don't see a lot of upside, the challenge is I'm going to buy it. How much more can rents go up? But what will the new insurance cost be? A lot of times it used to be insurance was an afterthought when you were buying something, but now insurance can be a deal killer. Because if you get that insurance quote in and it's much higher, you're like, wait a second, this person, you can't assume you're going to pay what he's paying. A lot of times you get your new insurance quote, it'll be 30% higher. So you're like, wait a second.
Yeah.
If the insurance is 30% higher, my return on this investment is not 8%. My return on this investment is 5%. And for 5%, I might as well go to the bank down the street and get that 6-month CD account. Why am I bothering? So that's the problem here. If the insurance is knocking out the returns so much, the returns are not attractive enough to do the deal.
Interesting. Jean, let me ask you a quick question. You've been talking about the insurance issue for quite some time.
Yeah.
I'm just wondering if you can make it real simple for the audience. If developers stop building because insurance costs are high and sellers don't want to let a property go for any reasonable price from a developer's perspective, and sales freeze, and you've made a lot of reference to the fact that the market is frozen right now. What ultimately happens to insurance? If things aren't trading, John, could we see a pullback in insurance, or could we actually see insurance prices even go up because there's even less deal flow, if you will? So what would be your take on that, John?
Yeah, I mean, I think the simple fact of the matter is that prices are going to have to come down. I mean, the market, doesn't like a vacuum. So, and what's going to break it is prices on deals. Sellers are going to have to come down, and the only way, in my opinion, that we're going to see that is through distress. I think distress sales, foreclosures. Apartment landlords are just not going to be able to make the numbers work, and we're going to see some forced sales and some distressed sales. And I think that's the only way the logjam's going to break. In my opinion, that's what's happened in the past. I mean, that's how Florida real estate. That's what happens when Florida's busts happen. That clears out the market. It allows new players to come in, and insurance is just one of those fixed costs, and it's just going to have to be part. It's just part of the mix now. You can't avoid it. So, I mean, something else has to give, and that's pricing. And I think you're going to get that through distress sales.
Okay, and just one follow-up question, just to put it to the roundtable. Is it typically a black swan that causes it, or is it simply time? The amount of time that somebody has financing, and then lo and behold, the interest rate adjusts, the term comes due, and all of a sudden there's a wow moment where you were financed at 3%, and now suddenly you're financed at 8 or 9 or 10%. What do you guys anticipate? Are we going to see a black swan like a Lehman Brothers or a pandemic, or are we likely to just see the loans come due and all of a sudden everybody gets that shock effect of the brand new insurance rates?
Yeah, I think as the
interest
loans
rates
come due, it's going to cause a problem because when they realize the loan's coming due, then they'll be forced to sell. A lot of people who, if their loan's not coming due, they're like, well, why would I sell at a loss? It doesn't make any sense. I'll just wait. But if your loan's coming due, you may not have a choice. So then it just becomes the fundamentals of the market. Now, South Florida is in a better situation than, say, New York, San Francisco, and Chicago, because we have more demand for a lot of the real estate. The office market, the residential market is healthier than those markets. But there will still be properties with a problem. Properties that just the numbers won't work, the loans are coming due, and they might have to, sell them for a price that's disappointing.
Interesting. Okay.
And if we have a banking crisis, which some people are suggesting that the regional banks are in big trouble for a variety of reasons, but commercial real estate being one of them. Certainly if some of the banks start failing, then that commercial real estate could be at risk. So the government's going to take them on, and there's going to be some forced selling that way.
Interesting. Well, that's definitely something for us to watch. Great story, Brian. Thank you guys for the analysis.